Chris Eccles from Empower Accounting and Advisory. The federal government has just released their 2017 budget, and today in this video I'm just going to run through the changes that affect business owners. So the first one is the extension of the $20,000 asset write-off. So it used to be only to 30 June 2017, it's now been extended to 30 June 2018. So that is for businesses with a turnover of $10 million or less. Next on the list is Medicare levy. So they are now increasing the lower threshold. So you'll only start paying Medicare if you're a single at $21,000 or $36,000 for families. But the kicker with this is in the 2020 financial year, the Medicare rate will now be increased to 2.5%. So it's currently 2%. Superannuation. So first homeowners can now put in up to $15,000 a year and with a total of $30,000 to save for their first home. So they can pull the money out from the 1st of July 2018, but just be aware that you may be taxed on pulling that money out depending on your personal tax rates. So people over 65 can now put in up to $300,000 per person on the sale of their home. So it's unclear yet on how that will affect the age pension, so keep an eye for that one. GST, so this is a big one for builders. So in the 2019 financial year onwards, on the purchase of a new residential property, the purchaser will pay the GST direct to the ATO, not to the builder. So that's a big one there for builders. Investment properties, so you can now no longer claim depreciation on plant equipment that you have not physically purchased. So what that means is basically if you get a quantity surveyor's report from now on, you'll only be able to claim depreciation on the building, not the existing assets in that property. And from the 1st of July 2017, you can no longer claim a travel allowance to go and see the property. The ATO have also they're now going to invest heavily in the audits of businesses with turnovers between $2 to $15 million. So just be aware that they're doing that. And with HECS, the repayment thresholds are actually being reduced down to $42,000 and at 1%. And they are increasing the rates up to $103,000 plus will now pay at 10%. So to give you an idea on that one, so if you're on an income of $42,000 or $43,000, you will now pay roughly about $430 of extra payments per year. So be sure to follow us on YouTube or Facebook as we'll be releasing more updates and tips over the next few months for business. And if you have any questions about any of this, please feel free to give us a call and get in touch.